What's up everyone, it's Kadi with Money Vesting. In this video we are going to be talking about ASML, so the company based out of the Netherlands. They did report their numbers for the first quarter fiscal year 23, and man were they excellent. Absolutely incredible numbers, not only beating revenue, EPS, but also coming in with very strong growth rates on a year-over-year basis, updating the share buyback program, excellent balance sheet, increasing margins, and also guiding very strongly for the second quarter 23. So hope you guys enjoyed this video and find it helpful. If you do, make sure that you drop a like. Don't forget to subscribe to the channel. If you're just joining us for the first time, the link to our Discord and Patreon is going to be down below if you're interested in joining us, and of course getting access to all the buy and sell alerts. And there is also a 16% annual discount available till the end of this month that you can take advantage of, and of course access all the private videos and private live streams as well. So links are going to be down below. So first things first, let's just quickly break down the actual numbers. So this is going to be their summary of US GAAP consolidated statements of operations. So what we have over here is net system sales to over $5.3 billion. That is an increase of over 100% on a year-over-year basis. And net service sales were up to $1.4 billion, a modest increase, but on a year-over-year basis, net sales increased by over 90% to over $6.7 billion. The cost of sales also increased from $1.8 to $3.3 billion. And as a result, gross profit also increased from $1.7 to $3.4 billion. So we've got gross profit growing at over 100%, net sales growing at over 90%, and we've got the actual income from operations, or in other words, operating income, pretty much growing by 200%, going from $784 million to over $2.2 billion for the company, which is absolutely incredible. And then if you come over to their bottom line, net income growing from $700 million to over $1.9 billion for the company. Again, a very substantial growth. That's over 100% increase. And diluted earnings per share going from $1.73 to almost $5 per share. Share buyback consistently, so 401 million down to 394 million shares outstanding for ASML, and gross profit as a percentage of net sales increasing to over 50%, and operating income margins also increasing to over 32%, net income margin increasing to 29% for the company. And the sales of lithography systems over here, so this right here in terms of units, increasing to over 100 from 62. So year over year, that's a pretty substantial growth in itself. It's, I think, over 70-80%. If you do 100 divided by 62, we're looking at a 61% growth on a year-over-year basis. That is, again, pretty substantial numbers there. Now, when it comes to balance sheet, cash and cash equivalents sitting at $6.6 billion for the company. Short-term investments have been decreased pretty dramatically down to $4.8 million only. So give or take, that's about $6.65 billion worth of cash and short-term assets. And if you come over to long-term assets here, in other words, fixed assets or non-current assets, we do have loan receivables a little bit. We do have goodwill, 4.5 billion, property, plant, equipment, equity method investments, and deferred tax assets. So none of that is going to be accounted for the cash and cash equivalents. And if you come over to total assets, $35 billion for the company, with the long-term debt sitting at $3.5 billion. So again, I mean, they've got literally no current liabilities. Can you believe that? I mean, absolutely no non-current liabilities, I should say. $8.4 billion is pretty much their non-current liabilities, and total liabilities at $25 billion. So bottom line is they've got plenty of cash to pay down all of their current liabilities, and of course their long-term debt as well. And their total liabilities are much less than their total assets at over $35 billion. And then if you come over to the cash flow statement, we've got net cash provided by operating activities, $733 million. We do have a very small free cash flow. So CapEx at $532 million, right? So that's their capital expenditures for this first quarter. So when you subtract these two numbers, we're sitting at a little bit over $200 million in free cash flow for the company, which obviously is not a substantial amount. Now, in terms of their press release, this is going to be, again, those numbers which we just went over in euros. And one of the things that they mentioned, the CEO mentioned, we expect second quarter net sales between 6.5 and 7 billion euros, with a gross margin between 50 and 51%. And ASML expects R&D costs around 990 million, SG&A costs around 275 million. For 2023, ASML expects continued strong growth, with net sales increasing over 25% on a year-over-year basis, with a slight improvement in gross margins relative to 2022. And this is the update on the share buyback program. The first quarter, we purchased 400 million euros worth of shares under the current 2022 and 2025 program. ASML intends to declare total dividends for the year 2022 of 5.8 euros, which is 5.5% increase compared to 2021. And recognizing the 3 interim dividends of about 1.37 euros. And this leads to final dividend proposal, annual general meeting of 1.69 euros per ordinary share. So detailed share buyback program as well as transactional pursuant. There are 2 details, dividend, all that website here. But nonetheless, shares are still down after the significant numbers coming in. I mean, we've got a very nice EPS. 461 was their actual EPS consensus. And we basically got, so if you come back over here, earnings per share were reported at around 495. So you got a beat on EPS. Revenue is expected at 6.95 billion, and they came in at 6.7. So slight miss on revenue, but a very strong beat on EPS for the company right now, pulling back. Now the valuation is still a little bit more on the expensive side. We're trading at 43 times earnings, 11 times sales, and a little bit over 28 times free cash flow, and 34 times enterprise value to EBITDA. So without a doubt, we've got a valuation that is, very significantly on the upside. And this right here is going to be the earnings expectation, where the company is expected to continue growing their EPS from $15 all the way to as high as $40 by the year 2026. And revenue is also expected to grow to over $45 billion. So on a forward basis, $20 is going to be their EPS, trading at 625 right now. So if you do the math, 625 divided by 20, 31, which is a little bit lower than 43, but still 31 times earnings is still, a little bit on the higher end, considering that they are, well, I guess if you consider the growth, that the earnings growth is expected at over 33%, and they're trading at 31 times earnings, the PEG ratio is a little bit under 1. I guess it's not that bad, but considering the long-term growth, right, over the next 5 years, as I did in my recent video for ASML, that long-term, they're not going to be growing at 30, 40, 50%, but it's going to be a lot lower at closer to 15, 20%, which I think is a lot more reasonable over the next 5 years. And for those reasons, I think the valuation still is a little bit more rich for the company. This right here is the entire analysis as we have done in terms of the technicals, and you can see that ASML has been trading inside this uptrending channel of higher highs and higher lows, and a couple times it's actually been regarded as being overvalued. This right here can be regarded as being overvalued because we were trading above or outside of this uptrending channel, and right now I can make a case that it's a very similar situation where ASML once again trading above that uptrending channel and trading at a level where it can be perceived as a little bit more on the overvalued side. So 2 occasions where it has traded outside of this uptrending channel at the moment. So my support level is going to stay put roughly around 356. So this right here is going to be that level to watch as a support. That's going to be in line with its October lows. And we've got a resistance staying put at $695 to as much as $879 per share. So those right there are going to be a couple of resistance levels to watch for ASML. So if it does end up selling off here on earnings, despite reporting some very good numbers, I would be very much interested closer to 350s, even as low as $400 to consider ASML for a potential swing trade, or even for a more long-term perspective as well. So let me know your thoughts down in the comment section below. What do you think about ASML? What did you make of the earnings? As always, if you enjoyed this video, found it helpful, make sure that you drop a like. Don't forget to subscribe to the channel if you're just joining us for the first time. The link to our Discord and Patreon is going to be down below. The 16% annual discount does expire at the end of this month. There's limited spots left, so you can take advantage of that while it's still here. As always, happy investing, and I'll see you all in the next video.